For the first time in at least 26 years, no Indian company is among the 10 most valuable stocks in the MSCI Emerging Markets Index. And the reason has less to do with India and more to do with artificial intelligence. The global AI boom is redrawing the map of emerging markets, and India is starting to feel the consequences. So what exactly is happening? The MSCI Emerging Markets Index is one of the world's most important stock market benchmarks. More than $700 billion of passive money tracks it globally. When a country's weight rises, more capital tends to flow in. When its influence declines, investors start paying attention. And right now, India's influence is slipping. Just a few months ago, India had two companies in the MSCI EM Top 10. HDFC Bank and Reliance Industries. In March, they ranked 7th and 8th. Today, HDFC Bank has slipped to 11th place, while Reliance Industries has fallen to 12th. Their weight in the index has also dropped below 0.8%. But this story isn't really about HDFC Bank or Reliance. It's about where global investors are putting their money. Over the past 2 years, global markets have been gripped by one theme: AI. Investors have poured billions into companies building the infrastructure behind the AI revolution: semiconductors, data centers, and advanced computing. And most of those companies are not in India. They are in Taiwan, South Korea, and China. Companies such as TSMC, Samsung Electronics, and SK Hynix have become some of the biggest winners of the AI era. As their market values surged, they climbed higher in global benchmarks, and that pushed others down, including India's biggest companies. India has delivered strong economic growth. Corporate earnings remain resilient, and Indian equities continue to attract domestic investors. But India has relatively few companies directly exposed to the global AI and semiconductor boom. That means it is missing out on one of the biggest drivers of global market returns today. The result? Taiwan, South Korea, and China have increased their dominance within the MSCI Emerging Markets Index. Together, they now account for roughly 70% of the benchmark. India's weight, meanwhile, has slipped to a 6-year low of 10.87%. That's nearly half the record level reached in 2024. This isn't just a ranking story. It's a reminder of how quickly global capital can move towards the next big theme. A few years ago, investors were chasing India's growth story. Today, much of that excitement is focused on AI. And unless India produces more globally competitive AI and semiconductor champions, it could find itself playing a smaller role in the world's most important emerging market benchmark. Because in today's market, growth alone is no longer enough. Investors increasingly want exposure to the technology shaping the future. And right now, AI is at the center of that story. Follow Business Standard for more such stories.